Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced pretty much within a range. And on the downside, we had support at around 84.85. This entire 81 quarter to 84 quarter area marks the bigger picture balance area low. And on the upside, overnight we had resistance at 95 quarter to 99 quarter. And that's the area that ended up capping the upside in the overnight session. So at this point, heading into the open, the market is very balanced and it is setting up for a directional move, and it's balancing near the lows here. So if the market continues holding below 95.5 to 98 and continues trading near the balance area low, that would be a risk point for the buyers, because if we actually end up breaking below 81 quarter to 84 quarter, that could result in short-term liquidation down into the 72 to 74 area, the 67.5 to 70 zone, and potentially even lower. At that point, sell side would be in firm control. It would mark a balance breakdown, and the focus would be more on the short side, and we would have to be cautious on any long setups, because when you're liquidating below balance, there can be a lot of momentum behind that move, and you don't really want to step in front of it, at least not early on. So right now the understanding is that we are at balance area lows, and there are two scenarios that can come out of this. Either the market can crack below the 81 quarter to 84 quarter, and that brings in the liquidation scenario, or if we continue balancing and then break out above 95 half to 98, then we can just as easily get a directional move to the upside, and we can go up to 0305, 10 half, 12 half, and finally 17 half to 19 half marks the upper edge of the previous 2-day balance. So, then that could come into play. And, it doesn't mean that the market is just going to go in a straight line, but above 95 half to 98, it can certainly gain momentum on the upside. So then you would have to be cautious on shorting the market and be more active on the long side. And as long as you're at least cautious shorting it, I think it'll be okay. And, of course, we are going to be observing the signals in real time to see whether the underlying internals and the underlying momentum via the NYC tick really supports these scenarios, right? So if we break out, but we're not seeing any momentum behind the move and the internals are still negative, of course that's going to be a red flag. But that's very unlikely considering the gap is 88 half. If we do break out, it should be on relatively strong internals. And on the downside, if we break down, again, we want to see those weakening internals to really support a downside liquidation move. If we're trying to break below 81 quarter to 84 quarter, but there's a huge positive divergence on the advanced decline, or the tick is simply not showing any kind of downside momentum, then that would be a red flag for sellers. Because at this point, if we break down, it should be happening on some pretty strong momentum and some very weak internals. The buyers would be stuck at that point, and it should result in some short-term liquidation. And if the underlying is not really supporting that idea, if the internals and the tick aren't really supporting it, then at the very minimum, it calls for some caution. But price action comes first, and as long as the price action is bearish, and we're getting lower lows and lower highs below 81 quarter to 84 quarter, that trend can still be persistent, and we can still continue heading lower. So that's really the context heading into the day. Stuck in a balance overnight. Overall, we're in a bigger balance, and at this point, we can either break down, get a liquidation move. If the market remains weak, we have a couple of catalysts in the morning anyway. 9 a.m. Central Time, econ reports, which can serve as a catalyst for a directional move. Or if we continue holding here, continue balancing, and then break out to the upside, then just as easily that momentum can gain some steam to the upside, and we can quite easily go up to at least 10 half, 12 half, and possibly even back up to the 2-day balance at 17 half to 19 half, and then perhaps over there, sellers are still active. And bigger picture, if we broke out above 17 half to 19 half, that would mark a bigger shift in the underlying bias, and it would confirm that now the buyers are in control, the low is probably in, and then we can just continue, marching to the upside. So that is the way the market is set up. Let's see, which side steps in aggressively in the first half hour. That'll basically give us the buys for the day, and we'll take it from there.